Hello everyone. Today I am going to provide you with an overview of MCX FNO for crude oil. So we publish a weekly report giving an view over the counters in MCX, and thereafter every week we take this as an opportunity to share the overview, and going forward we will also discuss how it looks for the coming week. So to start with, this is the report which we have published on 25th of July for the week 25th July to 29th of July for MCX crude oil. The counter has closed last week at 7660 levels, and we have mentioned that the bias continues to be buy on dip and sell on rise. Since last few weeks we have mentioned that crude oil looks sell on rise, and we have earlier given a sell strategy in crude oil below 9200 mark, expecting the targets of 7500 and lower levels in the worst case scenario, where we would have positioned ourselves on the long side. So last week when it ended at 7660 levels, it has formed still a negative candle on the weekly charts. As an outcome, we have mentioned that there can be a consolidation within a broad zone of 8500 and 7000 level, with a silver line of 8500 mark, that is a tug of war zone, below which the bias will be sell on rise. So that was an outlook which we have shared in crude oil last week. And if we see how it pans out, crude oil initially made a low of 7438 on Monday, and thereafter it witnessed a bounce back. As we can see here, from the lows of 7438, it made a high of around 8008 levels before ending the week up 2.38% at 7842 levels. So it formed a kind of doji pattern on the weekly charts, which indicates a kind of tug of war going on between bulls and bears. The simple reason of this tug of war is that in last 6 weeks, the counter has corrected from the highs of 9400 mark to the lows of 7300 levels, and it had entered into an oversold zone as per the daily and weekly charts, and thus we were expecting that any dip towards 7300 mark to 7000 levels can witness some kind of buying interest. Previously, in last 2 to 3 weeks, we have seen that there was a pullback from 7300 mark to almost 8300 mark, and thereafter last week it finally settled almost at the mean price of that range at around 7800 mark. Now going forward, we have mentioned that the bias will continue to be range within a zone of 7000 to 8500 mark with buy on dip and sell on rise outlook. So initially any dip towards 7300 to 7000 mark can be looked for buying. On the flip side, any move towards 8300 to 8500 mark can be looked for selling. Overall, gradually we believe that the bias will be ranged to down, and the counter will be open towards the lows of 7200 to 7000 mark in weeks to come. Because this counter has not given any kind of major swing last week, we have not got any kind of trading opportunity in this counter, because it has neither tested our support levels nor tested the resistance levels. But meanwhile, we have got few other opportunities where we have initiated strategies and gained something out of the volatility. The first counter was natural gas. We have the view of sell on rise in natural gas on move towards 700 and 750 odd levels. The counter last week made a high of 760 and thereafter slipped down almost 16% from highs to end the week at 640. So our first resistance was at around 700 mark, and on 27th of July, we have initiated a covered short strategy where we have sold natural gas future at 700 rate, and simultaneously we have sold 700 put at 78 rupees. So the bias was upside cap, and the break even was at around 778 mark. That means if the expiry would have been over and above 778, then only we would have incurred loss in this strategy. Otherwise, looking the high beta counter and the high volatility, we could have captured profit during that period. So as we can see the payoff structure on this, the expiry over and above 750 would have led to a loss of maximum 26,875. On the flip side, closing below 700 mark would have been a profitable strategy for us. The maximum profit was at around 700 and lower levels, where we would have gained 98,125 rupees per lot. When we initiated this strategy on 27th, we witnessed a first decent up move towards 760, but in line with the view, it failed to hold over those levels, and thereafter it tanked down in next trading session. So we managed to capture some profit. We have booked partial profit at around 652 levels. We gained around 38,000 per lot, and we are still holding rest of the position, expecting natural gas to drift down towards lower levels. Another strategy and gaining opportunity was there in gold and silver last week. So on 20th of July, we have initiated bull spread in both gold and silver. We were expecting silver to be high beta, and thus we have entered in a bullish strategy with futures. In silver, where we have bought futures and we have simultaneously sold 56,000 call. In line with the view, in the same session, silver future moved from the highs from the levels of 56,200 to the highs of 57,600, and we captured a profit of around 19,000 per lot same day. We booked partial profit around those levels, and we are still holding rest of the position. In respect with gold, we were expecting that it will not be so volatile, neither the momentum will be very fast. So we have used a conservative bullish strategy where a spread ratio was initiated. We have gone long at 51,000 call and we have sold 52,000 call. So as on 28th of July, the strategy was in profit at around 4,500 mark, and we are still holding both the strategies, expecting gold and silver to move up in days to come. Thank you, viewers, for your precious time. If you find our content relevant, then kindly get in touch with us with your queries, and for our latest research reports and trades. You can contact us on the given mail ID and the contact detail. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.